Welcome to this explainer on Fortis Healthcare's financial performance for the year ending March 31, 2026. I am so glad you're here with us today. We're going to do what we do best, take those dense, jargon-filled regulatory filings, balance sheets, and auditor notes, and translate them into clear, actionable insights. We'll be focusing directly on the official documents submitted to the National Stock Exchange of India and the BSE. So, let's just jump right in.
All right, to understand a company's true health, we've got to skip all the corporate fluff and just check the financial vital signs. The big foundational question on the minds of investors and analysts alike is really simple. Exactly how much money did this healthcare giant actually make over the 2026 financial year?
Well, in a word, a lot. Fortis brought in a massive 912,784 lakhs in operating revenue for the full year. That number is just huge, and it brilliantly illustrates the sheer scale of what they do. When you're running one of the largest healthcare delivery networks in all of India, the cash flow is tremendous. But, revenue is really just the top line. It's just the starting point of our diagnosis.
Section 1, Financial Vital Signs, Diagnosing the Revenue.
To really get what that massive top-line number means for you as an investor, we need to peel back a layer. A high revenue number is awesome, sure, but we have to compare it to historical performance. Are they exhibiting healthy, sustainable growth, or are they just stagnating? The numbers show a clear upward trajectory, which beautifully lays out their growth narrative. If we look at net profit from continuing operations, it jumps significantly, from around 80,900 lakhs last year to over 106,400 lakhs this year. That is a robust year-over-year expansion. It basically tells us they aren't just making more money, they're actually keeping more of it.
And their EBITDA absolutely confirms this trend. For those who might need a quick refresher, EBITDA is a crucial indicator of operational efficiency. It stands for earnings before interest, taxes, depreciation, and amortization. Basically, it tells us how well the core machine is running before the accountants and tax authorities take their cut. For Fortis, this metric soared from about 165,400 lakhs last year to over 213,000 lakhs in FY2026. So the vital signs here? Undeniably strong.
Section 2. Healthcare versus diagnostics. Breaking down the business.
So where exactly is all this impressive revenue coming from within the Fortis empire? Fortis isn't just one big monolith. It's split into distinct, reportable segments. We've got to break down the business to see which gears are turning the fastest. If we check out the gross value of sales, the division of labor is super clear. The core hospital operations, the healthcare segment, absolutely dominate the pie. They pulled in over 777,000 lakhs. In comparison, the diagnostic segment brought in a very respectable, but definitely much smaller, 152,000 lakhs.
But hey, the crucial point isn't just who makes the most sales, right? It's who actually brings in the profit. The data breaks down the actual profit generated by each segment before interest and tax. Healthcare delivered over 139,000 lakhs in profit, while diagnostics brought in just over 24,000 lakhs. So this confirms that the healthcare division, meaning the physical hospitals and actual patient care, continues to be the primary engine driving all this financial health.
Section 3. Dividends and board decisions. What it means for shareholders.
Okay, mark your calendars for May 22nd, 2026, because the Fortis Board of Directors had a major meeting. Now, this wasn't just a casual catch-up. This was the pivotal meeting to officially approve these massive financials and tackle some critical corporate housekeeping. Reading through the official letterhead submitted to the stock exchanges, we can see exactly what the board decided to pass down to the investors. When you read the primary sources like this, there's absolutely no ambiguity. Let's break down the key takeaways.
Beyond just rubber stamping the financials we just went over, the board took a few key actions. They approved a new corporate social responsibility policy, which, is an increasingly important metric for modern institutional investors. They appointed a cost auditor for the upcoming year, and, perhaps most importantly for the retail investor, they recommended a final dividend payout.
For the focused shareholder, the bottom line up front is this: a recommended dividend of 1 rupee per equity share. Because the face value of a Fortis equity share is 10 rupees, this payout actually equates to 10% of its face value. It's a tangible return of value directly into the pockets of the people holding the stock. It's a huge signal of the board's confidence in their cash position.
I also really want to point out their appointment of MS Jatender Navneet & Co. as their cost auditor for the next financial year. What's fascinating here is the pedigree Fortis is seeking out. This is literally the first cost and management accounting firm in all of India registered for audits under the US SEC Act. By bringing in a firm with this level of international PCOB USA credentialing, Fortis is sending a very strong message. They are serious about rigorous, global standard oversight.
Section 4. The auditor's fine print. Examining the emphasis of matters.
Now, while the numbers we've seen are fantastic, no financial analysis is complete without reading the statutory auditor's report. We've got to look at the report from BSR & Co. LLP, which contains some very specific legal fine print that every informed analyst needs to read. But before we get into the weeds, let's define a crucial accounting term: emphasis of matter. Think of this as an impartial way for an auditor to essentially wave a flag. It doesn't mean the financials are wrong. In fact, they issued an unmodified opinion here. But it's their way of saying, hey, make sure you're fully aware of these ongoing fundamental items.
This specific section of the auditor's report deals entirely with inherited legacy issues, and it is absolutely vital to note that these matters originated prior to the takeover of control by the reconstituted board of directors back in 2018. Basically, the current management is dealing with the echoes of the previous regime. Let's look at the two main flags the auditor is waving.
The first note neutrally outlines an ongoing investigation by the Serious Fraud Investigation Office, or SFIO. This is regarding alleged improper transactions and non-compliances with laws, which includes things like remuneration paid to managerial personnel in the past. The report explicitly states that the Fortis Group has been submitting the required information and is actively cooperating with the regulatory authorities to finally resolve these legacy investigations.
The second note references a 2022 Supreme Court directive. This relates to an analysis of transactions entered into between the holding company and the RHT Health Trust, again, reaching way back into the company's complex past. The current Fortis board is maintaining strict transparency about these unresolved matters. They are making absolutely sure that these historical footnotes are fully disclosed to the market, right alongside their current operational successes.
Which leads us with a really compelling final thought. Fortis is demonstrating massive revenue growth, highly efficient operational vital signs, and a clear willingness to reward shareholders. Yet, it's still transparently navigating the legal and regulatory legacy baggage of its pre-2018 past. So, as you look at these two realities side by side, what do you think the future holds for this healthcare giant? Can their operational excellence fully outshine the shadows of the past? It is a fascinating dynamic to watch. Thank you so much for joining me on this explainer, and keep learning.